Hi guys, welcome to the honeystocks.com stock market halftime report. Now, before I launch into quite a lot of charts for you, I'm going to just quickly touch on this. If you follow me for a while, you'll have read this a million times, but if you are somebody that maybe struggles in the market, you don't know what you're doing, don't take any of these charts as advice. Do not act upon any of these charts. I know absolutely nothing, and it would just make a lot of sense for you to be able to do your own due diligence, etc., etc. Now, to give myself a little bit of credibility, I'm registered with the CMT Association. I'm currently working my way towards chartered status at the moment. It's a big deal in the world of technical analysis, and technical analysis is what I am widely known for. Now, at the end of this video, I'm going to be putting a follow-on video. There's going to be a link to take you straight through to earnings season. For those of you that are, again, maybe coming across my work, the market is currently during earnings season, and it's a very difficult time to navigate. But if you are somebody that believes in consistent strategy, rules, etc., that video will help you out massively. So once this hopefully 15-minute video is finished, if you want to get a bit of insight into how to navigate earnings season, hopefully that gives you a bit of a heads up. And as always, in the bottom right hand corner there should be a subscribe button. We try to upload a couple of times a week, and naturally you're very welcome. So let's launch into the charts. Now, I think the first thing to say is the S&P 500, as we all know, is moving towards all-time highs. Now, we've had an incredible few days in the market, despite what we've seen today, and I will touch on some of the software tech names that have had a bit of a decline. But what you have to understand is that sector rotation is the absolute lifeblood of any bull market. And what we've seen and what we are seeing is simply a general rotation. Now, to the other side of that, this is a chart that I'm watching very, very closely at the moment. This is the Global 100 Index, and we are very, very close to breaking out. Now, this would be good news for the global marketplace. This ETF is made up of a basket of the biggest companies in the world from all over the world. You know, you're looking at Apple, Microsoft, Samsung, the biggest companies from all the different areas of the world. And if that breaks out, that's a bullish scenario, in my opinion, for global equities. So that's something that we have to absolutely be considering at the moment. Now, we also have semiconductors, and I am going to be running through quite a few charts in the semiconductor space with you today. So, you know, we have to understand that semiconductors breaking out again isn't a bearish environment for stocks. Now, it's a different discussion if we see failed breakouts, failed moves, which is something that we have observed quite a lot over the last few months. Stocks that have been demonstrating strength and perhaps moving above previous resistance into all-time highs, a lot of those breakouts have been failing. Now, that is absolutely something to be considering, you know, within the current marketplace. But hopefully the individual charts that I'm going to walk through with you will make a lot of sense. We also have the bank index, and we're very, very close to breaking out here. And that again would be a bullish scenario, in my opinion, for equities as a whole. Now, if the bank index is breaking out, it makes sense to try and observe where the strength is in the current market. Now, we have the Bank of America very, very close to breaking out. This is the weekly chart. It looks like today we've had a little bit of a decline. We've met resistance, but if we get that breakout, that would be an environment where we might want to be considering some of these big banking stocks. Goldman Sachs, for any of you that know about chart patterns, etc., we've got a chart pattern that's forming, something that was very, very similar with Nike recently that I highlighted a couple of months ago. And the expectation is that the Goldman Sachs should hopefully move towards the 220 level. I think all bets are off if we were to break below this level down here. And I have to say at the moment, this is not offering an optimal entry. I think for those of you that follow my work close enough, you all understand that I'm very much about optimal entries. The optimal entry for me would be down here. But given that we've just had the earnings report for Goldman Sachs, we had a huge intraday bounce, something that a couple of my clients jumped onto, which was obviously good. But the expectation is that that should now start to move towards 220. We've got Walmart again flirting there with this key level. I think if we get a bit of continuation here, again, the household names are holding up okay in the current marketplace. Walmart definitely fits the bill. Kansas City Southern. Now, I get a lot of messages because I think a lot of you wonder what the difference is between perhaps the analysis that I present to you today on social media and maybe the analysis that I present to my client base. What I would say is there's a very clear difference. And the reason for that is my clients get my charts first. They will receive the best charts in the best areas of the market before I present the social media. And I'll show you an example of a couple of those that I've presented to my clients just at the weekend there. But what you have to understand, obviously, my client base that obviously go through the process with me, the tuition, the trade ideas, the analysis, I have to provide the value to those guys first. Obviously, anything that I present to social media is a complete bonus. I know that these are super popular, so I do try and throw out as much content as possible. But KSU is one of those. It's broken out recently. This is a weekly chart, and I think this is starting to move. I think we've got TJX. Again, this was highlighted at the weekend to my clients. Again, optimal entry has been missed, but that doesn't mean that you cannot profit from this. Obviously, you need to do your own due diligence. You need to find your entry. You need to make sure that you're comfortable with the risk that you're putting into the market. We always have to understand where the blind spots are and where the danger zones are. But certainly TJX is one that's moving at the moment. Taiwan Semiconductors, TSM, again, this has been presented. This is really what I expect to happen with this one. So this is a stock that I feel like you should maybe add to your watch list at the very least. Give it some consideration. It does have the look of a stock that might pull back shortly. So absolutely, keep an eye on TSM. It's not a bearish signal that is broken out. So we want to be identifying the complete strength within the market. TER was highlighted to my guys a couple of weeks ago. It's obviously chopped about, done not a lot for a couple of weeks, but now it's starting to move. Now, what you would expect with semiconductors, if semiconductors continue to motor, if they continue and we get the continuation on that breakout, then you're going to need to identify the strength within semiconductors. That just makes logical sense. Like I said, it's a different discussion if we deal with failed breakouts. But I think at the moment, we have to go on the basis that we have a bullish thesis on semiconductors. So absolutely, I think Teradyne should be one that you should add to your radar. Absolutely add KLAC to your radar as well. I think the recent trend, the recent price action, there's a very clear area there, and I think you just have to understand where the danger zones are, guys. For me, this is second nature. I can build charts in 30 seconds, but I understand for many of you like to follow my work just to kind of reinforce what your thoughts are on a stock, maybe on a fundamental level, I don't know. But I think the one thing to maybe highlight is I think most of my successful clients actually come from a fundamental background, and I think by adding the technical side to your game can actually elevate your performance and elevate and your decision making will just become a lot more clearer. So, if you're somebody out there that maybe has a fundamental only view, I'd maybe encourage you to, have a look at the technical side of things and perhaps educating yourself, learning, etc. Nvidia again has broken out. Again, it makes a lot of sense. I think as long as we're above this level, as long as these breakouts are sustained with continuation, then that's something that we would look for. There is a little bit of a concern with Nvidia in particular here. Normally what we would want to see with breakouts is we want to see the momentum come in. We want to see that volume come in. That just reinforces the decision-making process for us. Now, up until now, we've not really seen that. We did absolutely. We had a full-bodied bullish candle on the 15th. That gave us the breakout. Today was a little bit choppy, a little bit dicey, but again, it's perfectly reasonable price behavior given the move that it's had recently from the low 170s. So I think if you're out there, you're in Nvidia, I think you can probably be bullish at the moment. Target, this is one of the stocks that I discussed at the weekend, and absolutely I think this is one of those that you might want to do a little bit of due diligence on. I think that just makes a lot of logical sense. CDNS, again, highlighted this one at the weekend to my client base. We had a breakout here. That's followed through a little bit of a pullback today. Again, very normal price behavior. I think we just have to, again, understand where the blind spots are on the chart, understand what your plan is for the trade, where you might want to consider exiting. All pays to just have that plan in place and just have that structure to your trading. CELG, again, highlighted to my clients at the weekend. We are above $100 here. There is a logical 10% upside here to previous resistance. So I think for those of you that are maybe out there, I think you would need to work out what the risk to reward proposition is if you're perhaps looking to take this trade. Again, it's not very difficult. I think we're just identifying the blind spots here. You're probably a blind spot is somewhere around there. So, absolutely bullish thesis at the moment on CELG, and let's see where it goes. Apple, again, breakout, shown a little bit of weakness over the last couple of days. So that would be a little bit of concern. If we get a failed breakout in Apple, that might present a little bit of a problem, I think, to the overall market. But I think at the moment, if you're out there, you're in Apple, I think you can be bullish. Absolutely, you can still be bullish. But I would have concerns. If you're a technical guy, I would have concerns if we broke back down here. And the reason I say that is with failed breakouts, we often get fast, aggressive moves going the other way. And that is something that routinely occurs within the market with breakouts. So if Apple fails this breakout, I think that might be a little bit of a concern. We've had Intelsat. My client, John Nolan, actually highlighted this one to my group during the week. Huge breakout, huge momentum and volume has come in. We've got earnings coming up in a couple of weeks, so that's something that you need to be conscious of. That's the other thing to say is, obviously I touched on earnings season at the start of this presentation, but I have not gone in and double checked each of these charts to see when they are reporting earnings. That is very, very important. You need to do your due diligence. I wouldn't recommend anything if you've got an earnings due within the next 7 to 10 days. So again, if you don't understand how to navigate earnings season, stick around for a minute at the end. Square Inc, again, it looks like it's broken out here. I think this would be the concern. I think adding in the 200 MA, So although we might have a best case scenario of 30% upside, I think we just need to look at the chart. When we look left on that chart, it's not terribly appealing, is it? So I think there are many better charts out there. I think that's the first thing to say. But given the volume of messages and emails that I receive on this stock on a weekly basis, I feel absolutely compelled to present it week after week. It's not because I like the chart. It's not because I think that this is a good chart to trade. It's because I'm asked for my opinion on it routinely. So this is my opinion on Square Inc. Do I like the chart? Absolutely not. Would I trade it? Absolutely not. But that's the chart on a technical level, and that just makes logical sense to me. Now, tandem diabetes is one that's been discussed again within my community over the last couple of weeks. Very clear, established support level, 40% range here, guys. Optimal entry has absolutely been missed, but hopefully you can learn something from this. So absolutely, we're bullish above this level, and there's a very logical target in place. It's more of a swing style trade. It's not a trend style trade, which again is probably my bread and butter. But these types of trades I like very, very much, and this is one that's obviously moving. Microsoft, it's right there. We're very close to breaking out. It's going to be very interesting to see what happens here. I know that there will be a lot of you selling here, maybe taking short positions. Again, it makes a lot of sense. I understand why. But I think if we're in a bullish environment, Microsoft is unlikely to get left behind, especially if they crush earnings. So Microsoft, I think you should do a bit of due diligence on that one. I think Ball Corp is poised to move in either direction quite aggressively. Again, chart pattern 101, triangle pattern, and all we're simply doing is we're just playing the waiting game here, guys. We're not gambling before the event. We're just looking to see which direction price is likely to move. One of my Australian clients, this is actually an Australian company, and this is off and running. We've got a double bottom pattern here. So this is for XRO. And if you like breakouts, if you're maybe from Australia and you've come across my work, this one might fit the bill for you. Abbott Laboratories reported earnings today. Now, I actually posted this chart to social media earlier on today, and I think it just makes a lot of sense that with certain stocks, they offer a lot of opportunity when it comes to earnings season. And I think what I'm really just saying to everybody is, and this is a log chart as well, so please understand that you need to do a bit of manipulation with the chart to kind of get this analysis. But I think you've obviously got a very clear, long established support level. You just need to understand where the danger zones are, and you're just saying to yourself, I'm bullish above this level. So Abbott Laboratories, I think that just makes a lot of sense at the moment. Now, Trade Desk breaks my heart as well. A couple of weeks ago, I presented the thesis that we had a rounded bottom. That absolutely held true, started to move, started to motor, but we've had a complete failure with a lot of the software names today in tech, and that's obviously a bit of a concern. So failed breakout, I think for me, Trade Desk just doesn't have the look of a stock that's appealing at the moment. We've started to move into a bit of a bearish range here. So again, you just need to understand that what the chart is actually telling you. And for me, that the chart is very much saying get defensive at the moment. It's not an environment that I would want to be getting aggressively long. But that's not to say that this cannot rebound. For those of you out there in Trade Desk, I'm totally with you. I will absolutely have my fingers crossed. I'll pray that you're position starts to move to the upside, I would like nothing more. But I think at the moment there's some danger signs out there. I think there's some issues with the software names. That's just been something that's been a concern over the last few months, if you want to kind of say that. And if we look to the semiconductors have taken 18 months to get back to that position that they're in at the moment. So you have to understand, what I said before is sometimes the rotation out is brutal, and I can see a case here that's playing out that a lot of the software names might just not make it back for quite some time. So if you're out there with Trade Desk, I would encourage you to do some very close due diligence on it. And we also have Etsy here. Now Etsy, again, I presented a couple of weeks ago inverse head and shoulders, and we've met resistance at the 200 MA, which is always the issue when we're trying to get back to former glories. I think we always have the best case scenario. Absolutely the best case scenario is the target here around $70. But you've got multiple hurdles for price to overcome in order to kind of get there. But again, it's just about understanding where the danger zones are on the chart. You can still be bullish, in my opinion, above this level, but I think below this level, I think that would be a scenario where you might want to just kind of reconsider your bullish thesis. But hopefully you've got a lot from this. As I said, if you have enjoyed this, subscribe to our channel, much appreciated. Give it a like, give it a thumbs up. If there's any stocks that you feel like should be on the radar, comment below, let me know your thoughts, and I'll try and get back to all your comments. But as I said before, I'm going to post a link now for the video for earnings season. And what I would also say is, if you are somebody that is struggling out there and you do want to perhaps pick up the technical approach and you want to learn from somebody that has the skills and the knowledge to kind of back it up. I'm not one of these day trading gurus. I'm not a get rich quick scheme. Solid technical foundation that education has provided me. So you can jump onto our website, honeystocks.com, if you didn't know. Super well known, super popular website. The other thing to say is that I can't help everybody. I think that the individuals that I generally work with and are able to help are those that are trying to fit trading around a career or a business. Maybe you're trying to get away from day trading, or maybe you just want better consistency and you want to learn and not just follow. I think those are the individuals that I find I work with more often than not. Many of you hunt around YouTube and trying to pick up all this free information, and you're trying to find the holy grail of trading. The holy grail does not exist. The holy grail is consistency, rules driven approaches, and that's something that I absolutely assist with. So if you're somebody out there that struggles, jump onto our website. Just if you want to have a chat with us, feel free to book in. But thank you very much for watching, and you should have a link in there for the earnings season. Thank you very much.